coronavirus fears dropped the market over 3% in one day. Today was the worst stock market day in the past 2 years. And guess what? Means nothing. Nothing changes because of what happened today. My portfolio had the largest drop ever, the largest single day drop in my portfolio's history since I created this, 1.27% minus $464 in price depreciation today. My price of my stocks in my portfolio dropped $464 or 1.27% today. And guess what? For me, that means nothing. I'm not upset. I'm not worried. As you can see here across the board, all the major indices all decreased today. As you can see, the worst day in 2 years for the Dow Jones. It dropped over 1,000 points or 3.5%. And I'm going to tell you what I'm going to do about it, which is absolutely nothing. If you've been following along with my channel, you know I'm a dividend growth investor, and I choose to invest in dividend paying companies that pay out that consistent cash flow each quarter, every month, in order to provide me with income that can one day surpass my worked income. So for me, I really don't care too much about market prices, like change in market prices due to market noise, which is what I'm going to call today, or swings in market volatility. I'm not too worried about that because I care about companies who increase their dividend each and every year for the long term. So for me, even though I lost $464 in market price, in market gains, those all diminished and got blown away today, my dividend income did not change. I am still receiving over $100 in dividends. None of my companies in my portfolio cut their dividend today. None of them have stopped paying their dividend. Nothing with regard to their dividends got affected today. Of course, I like price appreciation. Of course, I like seeing my dollars grow and the price of these companies go up. But that's not everything to me. I love having that consistent cash flow, that consistent flow of income, and I somewhat treat my investments as sunk cost. Many people will disagree with me here because they are growth investors or they're different kind of investors. But for me, because I have such a long-term outlook and I know that the market's volatile and that it will eventually recover because it always has, if history repeats itself, it will always recover. And while it's taking time to recover, I will collect my dividend income. So the coronavirus really scared the market today, as it's like it says here, 3.5% drop in the Dow, the worst performance in one day over the past 2 years. But it wasn't only America that got hit. As you can see from this article from BBC, global stock markets plunge on coronavirus fears. So as I was going through here, as you can see, all the major indices around the world saw a negative day today. So global financial markets saw some of the sharpest falls in years on Monday. After a rise in the coronavirus cases, renewed fears about an economic slowdown. Because of this virus, which again is a terrible thing that's going on, and I hope there's a cure that will one day come out very soon to help and solve this virus, the market's reacting to this news, and the growing fears are driving market performance. So in the US, the Dow and the S&P posted their sharpest daily declines since 2018. The Dow falling over 3.5%, more than 1,000 points in one day. The S&P ended 3.3% lower, and the NASDAQ sunk 3.7% today. As well, over in Europe, the UK's FTSE 100 shares closed 3.3% lower, the sharpest drop since January of 2016. So in over 4 years, the UK's FTSE 100 had the sharpest drop since January 2016. As well in Italy, which was seen Europe's worst outbreak of the virus, Milan's stock market dropped nearly 6% in one day. Obviously, Italy has the strongest fears because, like it says here, has the worst outbreak of the virus. But that's crazy. A little 6% drop in one day over fears of this virus. It had that much of an impact on the market. And I understand companies are reacting or putting out statements showing that there may be slowdown in revenue because of this virus, which I completely understand. But I'm not too worried about it. If I take you back to this article from CNBC, as it says here, what I've already mentioned, a 3.5% drop is the worst in 2 years. We move down. I'm just going to show you the chart that shows all the different drops. So the Dow's biggest one-day drops over the past 3 years. So as you can see through 2018, 2019, all minor drops, all below 800 or lower, nothing too drastic. Then today in yellow, February 24th, 2020, third worst drop, in the past 3 years. Slightly behind the 2018 drop, but still. Today, pretty significant drop. Is it time to sell everything, go to cash? I don't believe so. Do I believe the US economy and the world's economy is going to drastically shut down tomorrow? Absolutely not. Do I believe this is a very controversial topic where I'm going to get some different replies in the comments about my opinion? Absolutely, and I welcome that. I welcome the discussion. Anything I say here is not advice. It's not anything where I should guide you or tell you what to do. This is me and my personal opinion. I'm just sharing to entertain everyone and just give you my thoughts on the idea of what's going to happen in the market. And another reason I want to use to support my idea where this one-day drop of a slight 3%, 3 to 4% in the global stock markets doesn't really affect me because of this other article from the same publisher, from CNBC, a very trusted website in the world that I personally like to use. They posted an article later this day, 5 o'clock on February 24th, turnaround Tuesday. Stocks tend to bounce back quickly from market drops like this one. So a couple hours after they published their first article showing and describing how bad the day was, next article comes out. Don't worry about it. Tomorrow we're going to rebound. Obviously, no one can predict the future and we don't know what's going to happen the next day. But over history, if history does repeat itself, I like to point out some points here. The major averages all slid more than 3% on Monday as a number of reported coronavirus cases outside of China rose, which is what we've already talked about, which is why the markets did drop worldwide by at least 3 to 4%. If history is any indication, stocks may be set for a relief rally on Tuesday. According to Bespoke Investment Group, since March 2009, the S&P 500 has fallen more than 2% during a Monday session 18 times. And in that 15 of the prior instances, the index rose the following day by an average of 1.02%. So of course, 1% gain the next day is nothing to be excited about or nothing to be amazed about, and it's not actually going to wipe out the loss that we suffered today. But it's good to know that over history, usually the market, people realize they're overreacting, they realize it's not as drastic, and they actually do buy back, stop selling, whatever it may be, and the market conditions actually do recover that slight increase of 1.02% brings back the market to normal averages. So after reading this, I went back to my portfolio and I thought, okay, $464, 1.27% drop, not as drastic as the overall global economy, nothing too scary, nothing too worrying, because none of my companies changed their fundamentals, nothing about my companies changed drastically, none of my holdings cut their dividend or impacted or reduced their dividend. So for me, I thought, there's nothing for me to be stressed about. There's no need to sell any of these companies. Personally, I only sell my companies when something fundamental within the company changes, whether the company has all of a sudden is not making money, they're no longer profitable, or something drastic happens in the market that impacts the long-term performance of the company. Those are things I look at to sell my shares. Do I look at market news, or do I even take in consideration market news when determining when to sell my company? Absolutely not. I'm not too worried about it. For me, it's just one more day. It gives me more buying opportunities. For me, if this continues to drop, the market continues to go down because of these fears, this coronavirus growing and impacting more people, which is sad. But if it does impact the financial markets, I look at it as a buying opportunity. I look at it as an opportunity for me to go in, purchase more shares for the same amount of money, buy these high quality blue chip dividend paying companies that I believe have a strong financial and organizational structure where they'll survive throughout this little, I'm going to say, blip in the market and continue to grow, continue to make money, continue to increase profits, increase their dividends, and distribute that capital to the shareholders. So for me, this day was just something I really want to document. I want to document and show with everyone that the market did affect my portfolio as well as I'm sure it affected many others. And I really just want to point out for my own history and for my own benefit of showing that these odd days are not killer. Take them, use them as different opportunities to add to your portfolio. Don't cry, don't panic. Learn from it. Learn how the market works, learn how market news can affect your overall portfolio. Maybe make some changes, but don't stress, don't go to cash, don't sell anything. That is my opinion. You have to do what's right for you. And as always, I'm the Gen Z investor. Thank you for tuning to my portfolio. See you next time.